Hi, I'm Dominic Picardo here for Spreadbet magazine. It's Saturday the 18th of August, and today I'm going to be taking a look at one of Britain's hottest retailers, Next PLC. And Next is a firm favourite among British shoppers. I have to say, I don't really share the taste for this clothing retailer's products. In fact, it baffles me why anyone would want to wear Next when you can get much better looking schmutter with continental style over at Zara. But this is a case where you should never let your personal prejudices affect trading and investment decisions. There are plenty of consumer companies whose products I absolutely love, but whose shares I wouldn't touch with a barge pole. And then you've got the companies like Next, whose products I wouldn't be seen dead in, but whose shares are clearly well worth sporting. Now, Next has a great habit of beating city expectations. It regularly produces sales growth and earnings ahead of the guidance that it has given out. Cynics say that this is because it deliberately sets the bar low, but let's face it, at the end of the day, the square mile continues to lap up the investment story here, and we have to say that its sales have held up much better. The growth has been more impressive than many others on the high street, even despite the very difficult environment for retailers, with consumers being very cautious at the moment. And its shares, as we can see here, absolutely galloping ahead. The share price recently hit a new all-time high up here around £36.38. So clearly we have this terrific uptrend here, which actually goes back a good deal further than that. If we take a look at the very long-term picture, you can see this is a beautiful, smooth, long-term uptrend starting from 2009. But because the share price is at new record highs, it's in what they call blue sky territory. There aren't any historical levels such as these to stand in the way of the share price. So this bodes well in that sense of further gains. However, that's not to say that there aren't things that could restrain its progress in the near term, technically speaking. We're looking here at the weekly chart of Next, and down here we have the weekly relative strength index, and it is very, very overbought at the moment. The reading is above 80%. Now, overbought starts around 70%. And the same is true if we look at the weekly chart, and in this case the daily chart, or in this case the monthly chart. Once again, we're up around 80% or so. And to see the significance of this, we should look back at other periods on this long-term monthly chart where Next has become very, very overbought, has been sporting a reading of well above 70% or even 80%, as in some of these cases over here. And in 2002, momentum got mildly overbought around 70%, and then the share price went down from around £11 a share to around £7 a share. So that's a big fall of over 1/3. And then in 2004, once again, Next became very, very overbought, and the share price pulled back some 26%. From 17 down to about £12.50. 2007, once again, we get into overbought territory on the monthly chart, and lo and behold, you get this very exaggerated decline of over 2/3, obviously influenced by the major credit crunch bear market that was kicking in at around those times. But so clearly with this reading today, there is a risk that sooner or later you're going to have to get a pullback. Nothing can go up in a straight line forever. So if we look back to a couple of these episodes, to this one for example, and to this one, you can see that the price at least gets back to around this red line here, which is the 20